All right, let's get perspective on the markets. Ted Rechtshaffen is a president and CEO and portfolio manager at TriDelta Private Wealth. Thanks so much for being with me on the desk.
It's a pleasure. Thank you.
Well, I get to pick your brain, and these days are really interesting because it's a wholesale sort of washout. What do you do on days like this?
Well, again, day to day, you try not to do too much. Obviously, if there's names that you like and companies that you like, days like today are a better day, better opportunities to buy in.
Are you nervous, though, that particularly the gains we saw in 2023, they're forecasted to continue for 2024? January is not shaping up to be so great.
Well, a little chilly out there, chilly in the markets, but really, when you have outsized gains in certain areas and real weakness in a couple of areas, quite often you see it flip around the following year. So, that's sort of one of the themes that we see, not necessarily a full flip, but there are certainly some sectors that were beaten up last year that we think will have better gains this year.
So I was talking about the Russell earlier. Is that one of them? It had this very strong recovery in the latter half of 2023, and it's kind of rolling over, even though people said, yes, there you go, Russell, small caps are outperforming. It's time to get back into them.
Well, small caps are interesting. Obviously, they have underperformed. It is an area of a little more value than large cap. But at the same time, it's a pretty broad economic indicator. And the question is the economy really moving in the right direction to support it?
Sorry, this graph is not really reflecting the moves in the Russell. I'm not sure why that is. It's the ETF that tracks it, but the Russell itself is down at a 1-month low. When you look at the Canadian markets versus U.S., Canada has been disappointing, to say the least. Is that one of the opportunities you see to increase your exposure?
Well, I think there's definitely more value in Canada. There's certainly names that we like that were hurt by interest rate increases, but are solid names. One of the areas that's big in Canada that we're not sure is quite ready yet for recovery is materials. It's certainly an area of value, but we'd like to see a little bit more.
So that's gold and base metals?
Yes.
Any of these kind of special situations that you're getting involved in, First Quantum, would you touch that at all?
You know what? It's just an area that we kind of like to stay back until we're really comfortable that they're beaten down enough.
What about what we're seeing, not in materials, but it may be a dramatic situation unfolding with Gildan? You've seen big erosion in shareholder value, and there is obviously this war of words that's going on. But at some point, is this an interesting stock to you? Well,
they're always, when they get beaten up badly and it's the focus of the media, there's always opportunities. As a business, TriDelta Private Wealth tends to be a little bit more conservative, a little bit more long-term retiree focused. So we tend not to sort of jump on kind of the flavor of the day or the angst of the day. So it's not necessarily a stock we'd focus on.
Another consumer play that you do own is Spin Master, the toy maker. And that's interesting in the context. We just had a downgrade of Mattel today, kind of concerned about where's growth going to come from. Hasbro has underperformed. Mastermind, I guess, not went out of business, but now is in new owners and is restructuring. What is your bullish view on Spin Master?
Well, I mean, we're actually not that bullish on Spin Master. Sorry to feel put on there, but the issue, Spin Master is a great company for sure. Great brand, very broad, very diversified. I guess again our theme is sort of. You don't own it? We don't own it.
Okay, sorry, I thought you did.
Yeah, so consumer discretionary stocks where Spin Master would fall in. Generally, it's an area where again we're a little concerned in a recessionary environment and don't want to be too exposed there.